Welcome to Discovery Watch with John Kaiser.
I'm your host, Jim Goddard. Welcome back to the show, John.
Jim, it's a pleasure to be back.
Last week, Namibia Critical Metals announced a farm-out deal for its Loftal heavy rare earth project, and the market shrugged. Why does the market not care, especially if it's something like rare earths?
Well, Jim, that is really puzzling because in late October, the company was languishing at these, 13, 14 cent level when Casey Research put out a recommendation saying buy the stock all the way to 27 cents. And the stock roared up there and traded lots of volume. And the basic reason was this company has this Loftal heavy rare earth deposit in Namibia, and Rare Earth Mania 2.0 is something that could really happen if the relationship between China and the United States breaks down. But there wasn't anything new about the project. It's not in the money. It's basically an optionality play because at the current rare earth prices, it costs more to produce the rare earths from Loftal than you would get selling them. So the project is kind of dead in the water. Now, what's interesting is that the deal that was announced is that JOGMEC, which is a Japanese government agency, agreed to earn up to 74% of the Loftal project by spending $20 million over the next 8 years and funding whatever it takes to get this thing into production, reducing Namibia Critical Metals to a 26% carried interest. And they've spent over $20 million on this project since making it a grassroots discovery in 2010. So the market may have been bummed out about, they just gave away this wonderful optionality play to the Japanese. But what they seem to be overlooking is the fact that this project is worthless at current prices. There is nothing that Namibia Critical Metals can do about it right now or justify spending any money until we have significantly higher rare earths. But this deal, and this was something that wasn't really in the news release, you had to talk to management to find out, the deal requires that the first $3 million, and this is a firm commitment, has to be spent this year, and it is going not into boring metallurgical studies or infill drilling. This is going into either expanding the existing area for resource and testing additional targets that the company had outlined. Now, spending $3 million to find more of the same would be insane for a junior to do now, especially when that more of the same is worthless to develop at current metal prices. But what the JOGMEC is doing is it's saying, okay, so we got sort of 10 years worth of production here of these heavy rare earths, but is this thing a world-class scale resource so that this could be operated for decades, and if the demand for any of these rare earths really went through the roof, we could certainly ramp up production. So they're literally testing the total size of this play, and that's potentially very exciting because by the end of this year, we could know that there is maybe 4, 5, 10 times as much of this relatively low-grade heavy rare earth enriched mineralization at the Loftal project. Now, this is really significant because the heavy rare earth production all comes from southeastern China from these ion adsorption clay deposits. This is a weathered material. It's been converted by weathering. If once you mine it away, it's gone. You don't drill deeper to find more of it. And the problem that China itself has with these heavy rare earth deposits is that they are being depleted. Many of these operations are run by criminal entities. They produce this stuff wastefully. They flush a lot of it into the rivers, surrounding rivers. Environmentally, these are a catastrophe. And so for China, in the not-too-distant future, they are going to have to really crack down on this source of heavy rare earth and perhaps even impose export restrictions in order to protect a strategic domestic resource. Now, they have lots of light rare earth carbonatites. Bayanova, of course, is the monster that provides the lion's share of the world's rare earths, and you can always find more of those. The trouble with the rest of the world is that the deposits outside of China tend to be 1 to 5% deposits, and at the current prices, they're just not worth developing. Now, the United States has been, doing a lot of thinking about, what if this big power game that's resumed involving China really deteriorates, and for whatever reason, we can no longer get rare earths from China. And in fact, right now, one has to wonder if the coronavirus problem is going to temporarily shut down exports of materials such as this, which come, primarily from China. And if even China itself could end up undergoing a political and not just economic implosion, but a political implosion that turns this country into a basket case as the people revolt against the authoritarian dictatorship that is being imposed from the top by the Communist Party. And then things aren't really going to be flowing to the rest of the world. So the United States has been looking at various options for, how can we stimulate rare earth production outside of China, and they've talked about maybe giving money to Australian companies or even Canadian companies to advance their rare earth projects, but they're really not thinking about the real issue, which is that the rare earth prices are simply too low to justifying putting these deposits into production. And so basically nothing is really done. And the United States is not going to step up and declare that, okay, we're going to fix the price of all these rare earths at 3 to 4 times what it is from China. That's not going to fly with anybody. So we have to wait for some train wreck to happen in China that sends rare earth mania 2.0 through the roof. But the Japanese are looking at this differently. Right now they get their light rare earth from the Lynas' LAMP facility in Malaysia, which is fed ore from Mount Weld in Australia, which is a world-class deposit of about 9.6%. And but in Malaysia, the problem is the whole ore is being shipped there, so Malaysia has to deal with the thorium, and it's an ongoing controversy. Malaysia doesn't want the cracking of the ore to be done in Malaysia. They're fine with the separation activity, which is basically mixed oxides from which the thorium has already been removed. And so Lynas is facing the possibility of rebuilding the $600 million cracking facility in Australia, where it has to deal with the not in my backyard attitude of the Australians, which was the initial reason why they built the cracking facility in Malaysia. So Japan's sitting there thinking, okay, we got probably a medium-term problem, continuing to get our supply from Malaysia. We definitely see a problem with heavy rare earths, and the heavy rare earths, there's only 2 of them that are particularly important right now, and that's dysprosium and terbium. And you add that to the light rare earths, neodymium and praseodymium, which are the key components of the supermagnets. And by doping it with dysprosium, you prevent the magnetism from disappearing under high operating conditions. And so it's a critical input. It's not usually found in the light rare earth deposits. And so they've made a very important strategic decision. Namibia is a place that already deals with radioactive material. There are uranium mines at places like Rossing, so the country is not paranoid about dealing with radioactivity, and the thorium is a considerably milder form of radioactive waste that there are methods of dealing with. So this is a major development for both Japan and for the for Namibia critical metals. And obviously JobMec is not going to spend whatever the $200 million needed to put this into production. When this thing is ready, they will make it available to one of their industrial giants, such as Toyota or Mitsubishi or whoever needs this raw material, and they'll basically just hand it off to that party. So in essence, Namibia Critical Metals has done a deal with Japan Inc. to see this asset developed. Now, this isn't the only good news. That news came out last week. This week we got another news release that, to me, is a new Discovery Watch story. They announced that on the Konini Cobalt Copper Project, which is about 340 kilometers north of Loftel at the northern end of Namibia, they had last year done mapping and prospecting and discovered 250 carbonatite dikes running 20 centimeters to 4 meters in thickness within a sort of 5 by 6 kilometer area. But what's really interesting is that these are grading from 10% to 25% rare earths. And this is a carbonatite, so there's going to be hardly any heavy rare earths in it. But at these grades, these are world-class grades. And it was as a byproduct of looking for the cobalt that similar to the Opuwu project next door that Celsius Resources has. That project has a pretty good resource, but with cobalt back at $15 per pound, that project is worthless. Namibia Critical Metals efforts on the Kunini were a bust. They really didn't do anything on that front last year, during which they were unable to raise money for Grootfontein and the Orongo prospects, one of which is gold and the other one's a sort of a nickel and zinc play. But this was a surprise, and part of that area is undercover, so they only sampled what outcropped. The market did not go crazy because you want an intrusion, a blob, like a 16 million ton mountain pass at 8%, or a 14 million ton Mount Weld at 9.5% total rare earth oxides. That's what you want. That would be world class. But the possibility is here because this is magmatic as opposed to hydrothermal, such as the Loftel dikes are. This means that the source, the plug from which these dikes emanate, if it's shallow enough, it'll likely have a similar grade and could be a world-class open-pittable light rare earth deposit. And this would produce an awful lot of neodymium and dysprosium. I doubt the Japanese were aware that NMI was cooking this up on a completely separate project, but I'm sure they are now paying very close attention to this. The company will go back in there and do a geophysical survey, which will help them see where these dikes are all oriented and hopefully identify some wider parts that could be subject to local open pitting, and perhaps find a bigger 5 to 15 million ton plug that could then just be systematically mined as one open pit. So the grades are fantastic. It's not that usual 1% to 5% you see in these other light rare earth deposits around the world. And the mineral is bastnasite. That is the conventional one that's in deposits like Mountain Pass, which is best understood for its cracking characteristics. Many of these other rare earth deposits have complex minerals such as apatite or silicates, which have, or even worse, eudialyte, which have horrible processing problems. This is a very simple mineral. So I don't understand why the market hasn't responded to this, but I made this stock a favorite. I kicked it off the favorite list last year because they didn't seem to have accomplished anything at all last year. But now they've got these two projects in the rare earth sector that are alive and well, on which money will be spent, and they plan to tackle the Orongo gold project, and the gold in Namibia is starting to get a lot of attention from the market. So I expect Namibia Critical Metals to come out of its doghouse and soon be recognized for this major accomplishment.
We'll have more with John Kaiser right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlin, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
Welcome back. We're speaking with John Kaiser. John, Scandium Mining International announced a windfall, but the market more or less ignored it. What's that all about?
Well, on January 20th, Osisko Royalties put out a news release that seemed to have nothing whatsoever to do with Scandium Mining International. They announced that for $3 million, they had bought a bunch of royalties associated with the windfall claims, where Osisko Mining is outlining what hopefully will be a very substantial gold deposit that somebody will buy out and put into production. And a shareholder who's been with the company a long time contacted me and said, do you know that Scandium Mining is an owner of the royalty? Did they just get a $3 million windfall? And I said, well, how would you know this? Scandium doesn't talk about any royalties in any of its filings. But this shareholder had, for whatever other reason, gone through the technical report that Osisko Mining filed to support its 2018 windfall PEA, and there was a section on title in that which mentioned various royalties held by claim holders, and Scandium Mining International was listed in there. So I tracked down this technical report and read this, and I realized, okay, this is interesting. So these are royalties where they can be completely bought back by the owner, basically extinguishing them, and Scandium Mining would get $1 million Canadian for its royalty on part of that whole claim package. So obviously not the whole $3 million, but $1 million. And so I published in my Kaiser Research Online Slack workspace, which is sort of a private, informal forum where I communicate with KRO members. I explained all this and said, this is actually quite material, because when they filed their financials at the end of September, they had $100,000 in negative working capital, and with their $150,000 a month burn rate, they're probably in the hole $500,000 right now. So they've been struggling to try and raise money, but don't seem to have had any success. And lo and behold, here they suddenly have this windfall that could at least pay off all the accumulated debts. And somebody, against the rules, copied and pasted it into the Stockhouse Forum, and it eventually came to management's attention. And even though they haven't put out any news releases since early July explaining what they are up to, they grudgingly put out a short news release explaining that, yes, we did get a small windfall. It's not as big as people think. There were other parties that had pieces of this royalty, and by the time it's all distributed, we ended up with $500,000 Canadian, just under $400,000 US. So basically, the treasury is probably back to just being empty, not negative. So it has helped the situation out a little bit, but it's not quite the windfall everybody is hoping for. The company is still in this very strange mode of not communicating with outside shareholders. In a recent presentation or interview in London with Proactive, one of those marketing companies, they mentioned that 45% of the shares are held by insiders who all have a seat at the boardroom table. And that really annoyed me, that statement, because there's about 7-8 people who own nearly half of this company who sit in on these board meetings and are being told on a regular basis what is going on with the company. Are we getting any cash from little windfall sales like this? What's the status of the LOIs regarding offtake deals? What other things are we working on? And, earlier in January, the company did an interview with Tracy Wozlowski's InvestorTel, another one of these sort of entities where you pay a bunch of money at the beginning of the year, and then you have the banner ads on the site, and they do periodic interviews. And this was also really a interesting interview because Tracy was puzzled about this strange thing the United States did when it's worked out a truce with China over the trade war, and somehow the Americans got the Chinese to concede that the Chinese would buy any scandium or yttrium produced by the United States. And I'm sure the Chinese negotiators must have almost fallen off their chairs and suppressing their laughter, but they said, I guess we will do that. We will have to do that, knowing full well that the United States has no scandium or yttrium production whatsoever. And in fact, if China could get a lot of scandium, I mean, it has 40% of the global aluminum market. Right now, it's the biggest producer of scandium, which it gets as a byproduct from the Bio-Noble rare earth mine and from titanium dioxide waste stream stripping. But the theoretical limit for that is 100 tons a year. Right now, global output's probably 20 to 25 tons per year, but the eventual market is in excess of 1,000 tons. And in the case of yttrium, right now yttrium is an oversupply. That's the dominant heavy rare earth that would come from projects like NMI's Loftel, and that also comes from all those ionic clay deposits. But there's delicious irony in the fact that the U.S. Department of Energy is funding research into a solid-state magnesium ion battery, which would not have the flammability problems of the lithium-ion battery, and the magic ingredient for this is yttrium. And so here the Chinese, who I'm sure watch all this stuff, all the academic reports, must have been delighted that somewhere down the road they would have dibs on any yttrium production. And of course, they would have figured out how to steal the technology. There wouldn't be any patents that they would worry about. But they must have been absolutely delighted to hear about America's future willingness to sell yttrium and scandium if it would ever produce that. But the CEO in that interview used this as an opportunity to talk about something they're working on that I had no idea the company was working on. They said that they were looking at a potential U.S. Scandium deposit. Now, I know several years ago they looked for potential U.S. deposits, checked out whatever they had come up with, and ended up dismissing them as not being very interesting. The only scandium in any U.S. deposits are as a byproduct, NioCorp's Elk Creek deposit, which is primarily a niobium deposit. It has a scandium grade that's about twice, a little bit more than double what you would be the grade of scandium in the dirt in your backyard. The company is trying to claim that it'll be able to sell that for $3,500 a kilo, and all the other potential producers are saying $1,500 to $2,000 a kilo. So this billion-dollar capex thing isn't really going anywhere. But Willem Divestien, who's the chief technology officer for scandium mining, and also the brains behind all the process technology, he's quite familiar with processing all these different deposits. And they picked up the Kiviniemi deposit in Finland a couple years ago, which has a grade of about 150 ppm, which is lower than the sort of 300 to 500 ppm that these laterites have in New South Wales. But if they were to have identified a deposit like this in the United States that is primary and scalable, that would be a very big deal. And that could turn around this negative funk right now where everybody's saying, well, these letters of intent aren't delivering. It's been 2 years. There's been no word of anybody signing up for future scandium offtake, and maybe that's because it's in Australia. The permitting department still hasn't made a ruling on the agricultural land status. But yes, if you have something in the United States that is of strategic importance to the United States, and they would just tell China, sorry, we misspoke. We're not going to sell you any scandium at all. So finding out that the company is working on something like that is really interesting, and it's peculiar that the company would choose some sort of, a promotional interview to update its audience. Now, the 45% shareholders who sit at the board table will be completely plugged into all of this that is happening, but the rest of us, the 55% who own the stock and just get to read the boilerplate in the quarterly statements and haven't seen a decent news release since early July, we are being kept in the dark. So this is a really peculiar turn that the company has done. In that London interview, the interviewer asked if the 55% shareholders are supportive of the company. And I think the proper question should have been, is the company supportive of the 55% shareholders who do not have a seat at the board? And it would have been interesting to hear the response about that.
We'll have more with John Kaiser right after the break.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Media recognition from Bloomberg, Reuters, Recycling Trade Publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with John Kaiser. John, is there anything new in the Dixie area south of Red Lake, and where exactly is that?
Well, Red Lake is that world-class mining district in the far western Ontario. It's what made Goldcorp into the powerhouse. It was recently sold for about $500 million to Evolution Mining, an Australian listed company. But the Dixie area is to the south, an area that had received some exploration. The Dixie deposit itself has over 100 holes into it. It's a ratty deposit that's not very good, which is why Newmont gave it to Great Bear a few years ago for a pittance. But the new story is that a lithoprobe done back in 2004 by the Ontario government looking for a good place to store radioactive waste. It was done in this area, and in the last few years, people finally got around to looking at all those seismic lines and sort of realizing, there's a deep-seated fault that sort of curves to the south that is probably the feeder for all the Red Lake mineralization. But there's also this other one, this LP fault, which wasn't really recognized by previous operators, and Great Bear early last year staked a 23-kilometer segment of this fault, and when the Dixie Hinge Limb Zone, or Dixie Limb Hinge Zone, started reaching its limits of high-grade mineralization, they had done sufficient work to realize that the LP fault is more like a traditional Destor Porcupine fault on which all the splays and things coming off of it can hold significant gold. And so that helped them into this sort of $8.50 to $9 a share range. And the news in the past week that they put out is that they've invented a 2% royalty, an NSR, on that property, which they intend to spin out for the company. Because if they are successful in demonstrating that, here's a 20-kilometer fault on which there could be tens of millions of medium or higher grade gold ounces, maybe even some disseminated lower grade open pitable ounces, they'll get absorbed. So they're kind of creating a present for their shareholders where a 2% royalty on that entire package could end up being worth an awful lot down the road. Now, other news in the area is that BTU Metals, which owns the Dixie Halo property to the south, they've been drilling on the TNT zone, which is a VMS discovery. They're not yet into the massive sulfide lenses. They're still sort of in the feeder stuff. The stock got pounded last week when they put out some more results on it, showing that they're still not really into the guts of the system. But while asking somebody about this area, like I know Bruce Durham, I also know Bob Middleton, I got word of an interesting junior to which I've never really paid attention. And I introduced Golden Goliath Resources to my audience last week as a bottom fish spec rated company. It has a market valuation that's less than 3% of Great Bear, and it owns about 10 kilometers of claims straddling what's called the Packwash Lake Fault. Now, in their interpretation of the lithoprobe data, they show that, yes, there's the fault rising up into the Red Lake District area. There's the LP fault rising up into where Great Bear has its big play. And then coming off of that are two more faults to the south that also run in a somewhat east-west direction. One is the Packwash Lake Fault, and a little bit further south is the Sydney Lake Fault. Now, this is in an area where nothing much of interest has ever been found. Back about 9 years ago, Laurentian Goldfields, which eventually got rolled back 10-for-1 and acquired the Matson project and survives today as Pure Gold Mining. It had the Gold Pines project surrounding all of Packwash Lake itself and the surrounding area, and this what Golden Goliath calls the Quai claims, and what was also called back then. And the work Laurentian Goldfields did in conjunction with Kinross was they did MMI surveys, and most of it was done to the east of Packwash Lake. They never really did find anything interesting. They did look at the Packwash Fault on the Quai property, but it's pretty sort of swampy and overburden covered, and they found one area where there was some quartz outcropping. There was a tiny little bit of gold, but nothing really substantial, and this was all dropped. Now, Golden Goliath went public in 2000. It's Paul Sabara's company, and it went public with a focus on Mexico, where it has been focused until 2016, when when El Chapo got arrested and other cartel gangs moved into that area of the Sierra Madre where they had all their claims, and all of a sudden the reasonably peaceful coexistence between the exploration juniors and the cartel suddenly turned nasty as different cartels started feuding with each other and then extorting the juniors, making life dangerous. So Paul made the decision. He sold a whole bunch of the properties to Fresnillo for about $3 million US, and that finally came in late 2018. But by 2018, he was fed up with Mexico, wanted to come back to Canada, and he contacted his friend Andreas Lichtblau, who was been for decades the Ontario Geological Survey district geologist for the Red Lake area. And Paul liked the Red Lake area, and he asked his friend, is there anything there that I should be looking at? And so he said, well, call Perry English. He's like the resident landman. He owns all the claims that come open. And so he went and looked at about 9 properties that Perry had for offer, and Andreas went and sort of consulted with him and said, I like this Quai and the Sydney Lake. The problem is there's no real evidence of gold in this except a little bit of smattering, but that's because it's all overburden covered, and nobody's really bothered to go that far south, and nobody has any reason to think that something like this LP fault zone is actually very fertile for gold, as Great Bear has since the start of 2019 demonstrated. So he optioned these claims on relatively easy terms, and did a IP survey over 2 locations, one of them where the quartz vein stuff is, and then it sort of lit up, and then this is where things got interesting. Unfortunately, Andreas Lichtblau was diagnosed with leukemia by midsummer, and by October he had managed to get bunked into a room with somebody who had a cold, and next thing you know, he got pneumonia, and that was the end of him. But Bob Middleton, who had been sort of brought in earlier, a friend of his, the geophysicist who had done the survey, sent him the geophysical data and said, "What do you think of this?" And he stripped the name off it, and Bob got pretty mad at him and said, "Why are you asking me to, look and think about the old Bell Creek geophysical data?" And that was the discovery he was involved with in the late 70s in the Timmins area. And when he found out that this was actually something new in an area without, any gold system, he has become involved. And so that just a random chance encounter with Bob put me onto this story. And what they've got going now is a magnetic survey on 100-meter spacing to increase the density so they can see more how the various splays and that which come off this 10-kilometer long fault behave. And with this, they'll use that to focus these IP surveys, because the IP surveys highlight where there are disseminated sulfides, and so they hope to see more locations within that 10-kilometer Packwash Lake fault. Hopefully by mid-March they should have the results from this, and then in the summer they would go in there and do auger drilling to get through the the overburden. There's also a nasty till clay level which prevents the particles from the bedrock to get into the soil, so you have to actually get through that to do any sort of till sampling to home in on where gold might be coming from. So it's this 10-kilometer long strip called the Kwai Project. The company has 117 million shares, fully diluted. They still have $1 million left from the $3 million they got from Fresnillo for selling most of their Mexican properties. And here you have it. If the whole theory is correct that this lithoprobe survey outlined, this could be the surprise discovery coming out of this whole rethink of the Dixie area south of the Red Lake District, and we should know maybe by mid to late summer. So it's an example of the kind of a bottom fish you can find out there. Company's never been rolled back. Management doesn't appear to own very many shares in it, but they haven't done the usual nasty thing of wiping out minority shareholders through a stiff rollback and repapering themselves. So I introduced this as a new bottom fish spec valued stock to watch for the Kaiser Research Online members.
John, thank you so much for the update.
You're welcome, Jim.
We've been speaking with John Kaiser, his website, kaiserresearch.com. I'm Jim Goddard.
Comments made on Discovery Watch are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at howstreet.com. Discovery Watch is a production of How Street Media Incorporated.